Hello, I'm Chris Hardaway. Welcome to this edition of The Best Times, a series that looks at life after 50. For most of us, the homes we live in are our biggest investments. But it's a sad fact that bad savings habits can leave many older adults house rich and cash poor. What if there was a way to tap into the equity in your home without selling it outright? There is. It's called a reverse mortgage. Under the right set of circumstances, it can be a financial lifesaver. But it's a complex loan that's tricky to understand with plenty of pitfalls for the unwary. Is a reverse mortgage right for you? Let's take a class in Reverse Mortgage 101.
If you've been thinking about financial options for your retirement, maybe how to provide some real security for you and your family, you really ought to consider a reverse mortgage with AAG.
You've probably seen these TV commercials with former Senator Fred Thompson extolling the virtues of reverse mortgages. Even the Fonz thinks it's the right plan for you.
Now call the number on your screen and let One Reverse Mortgage help you live a better retirement. Does that sound too good to be true?
It's not free money.
It implies that it's just something that everyone should do, that almost you'd be foolish not to do.
Reverse mortgages have been around since 1990, but it's only in the last half dozen years or so that they've gained a degree of popularity. Let's start with a basic definition of a reverse mortgage.
It's exactly the opposite of a regular mortgage. Instead of you making payments and every month you have more equity in your home, you're getting money, and there are different ways you can get the money, but you're getting money and they're charging you interest on that money. You don't ever have to pay it back as long as you live in the home. But the equity in your home is decreasing every month.
Here's how it works. You must be 62 or older and own your home or have substantial equity in it to qualify. The loan amount will be based on your home's appraisal and your age. In general, the older you are, the greater the loan amount will be, but don't expect to get your home's full value. Over 90% of reverse mortgages are HUD-sponsored HECM loans, which require counseling by third parties. With a certificate from the counselor, you can close on the loan and choose a form of disbursement. You can get a lump sum, installment payments based on a schedule you determine, a line of credit, or a combination of these. Not all loans offer all of these options. As long as you continue to live in your home, maintain it, and pay all taxes and insurance, you don't make any monthly mortgage payments. The loan balance isn't due until all deed owners have vacated the house for whatever reason. In a normal scenario, the lender would sell the home to pay off the loan, or your heirs could buy the house using a traditional mortgage. It's a complex process, but it comes with one big advantage for a cash-strapped homeowner.
The advantage is you can get money.
It's an opportunity for liquidity when they are house rich and cash poor.
The disadvantage is, number one, while you continue to own your house, you are accumulating a debt, and that's a cost.
That's a key point to remember. This is a loan, which means it accrues interest and comes with fees and expenses. And tapping into your home's equity doesn't come cheap.
It is extremely expensive, and if you really were to take a look at your real cost of money, it's extraordinarily expensive.
The bank is taking a guess on how this is all going to work out. And that's what causes the fees to be higher than they are in a regular mortgage.
HUD has changed their HECM product recently to lower some of these fees, but the amount of money you'll get from your house has also been lowered. And that percentage is dependent on your home and your age.
The whole key to the reverse mortgage is how much the home is going to appraise for. They're never going to get the full value of the home. It's always going to be a percentage. It's usually, depending on age, somewhere between about 55 and 65% of the value of the home.
So the older you are, the more money you'll get out of your house. But the recent trends run counter to that financial logic.
20 years ago, this was something that people did really late in life. The average age was 77. So now that the typical borrower wants a lump sum and they're 62 years old.
My recommendation is you avoid it until the last possible moment, and I certainly would be concerned doing it before age 75.
Anytime you're looking at a reverse mortgage, if there's any way to wait, the longer you wait, the better off you are.
Because of the complex nature of reverse mortgages, HECM loans require counseling, and recent changes to the rules require face-to-face, third-party counseling.
The counselor really tries to make all this rational, try to really outline the upsides and the downsides of it.
They see the commercials on TV and they think, oh, I can get some money and do all these wonderful things. And that may be true. But there are costs involved with doing it, one. And two, if, as many people are, planning to use their home as something to leave to their children as an inheritance or a legacy, however you'd want to put it, that's going to get in the way of that.
So who is a good candidate for a reverse mortgage?
If you're 75 and you're in a house that's just fine, but it's a big house, it needs a $10,000 roof on it, and you don't want to be making another $100, $200 a month payment, this could be the perfect thing.
Census Bureau statistics show that 36% of Americans haven't saved anything for retirement. And the average savings for a 50-year-old is less than $44,000. Given those sobering statistics, aging baby boomers may have to give reverse mortgages a second look.
You really need to investigate. You need to look into it real closely. I mean, it can be a lifesaver. It can keep people in their homes. But at the same time, it can mess things up also.
I think there will be a number of people who will worry more about what they're doing for dinner tonight than getting out of debt and saving for their retirement. And those people probably will be almost forced into using something like a reverse mortgage. And I think a good percentage of them will regret it. Some of them it will work well for, and you just don't know which are which.
For more details on reverse mortgages, go to the website of the Department of Housing and Urban Development or call their toll-free number.